Hello and welcome to another update video about WTI. We take a look at WTI futures, crude oil futures, and you can see that we are still tracking higher here at the moment after the market reversed in the larger support zone, which was defined for this wave 2 correction, which bottomed in June, around the 5th of June, at $72, $73. So since then, obviously, we've been trending higher. The local trend is up and it's projecting currently prices of $100 plus for oil. There are enough fundamental catalysts I can think of, and also the Elliott wave count allows definitely for higher prices. I mean, the trend is up. The problem is it's not a very stable uptrend. The rally is seen as an ending diagonal in a wave C of a larger B wave. So it's very unstable. Okay, it's, for example, the rally from the December low into the April high. It's a 3-wave move. So the wave 1 is a 3-wave move. The wave 2 obviously is also corrective. The third wave now would also be an A, B, C structure. So it is a bit of a mess here. I just need to tidy up that wave degree here. Okay, it's a bit of a mess, and therefore, again, it's not a very, very stable uptrend. Circle wave 3 here should reach $100 plus, but there's still a bit of work to do, obviously. Okay, so in my preferred scenario, I see the market currently as moving up in a wave A of that third wave, and this A wave could still extend a bit higher. At some point, we should get a higher low in a B wave and then a C wave rally. We've now approached the next trend line. Okay, so you might not see that very well, but I could add that here in red. So that could be a nice breakout from there. Let me zoom in. So if we consider wave 2 bottomed in June, I track the larger A wave itself as an ABC structure. So it is quite messy, and the C wave obviously is a 5-wave move. That C wave started in June, 16th of June, wave 1, wave 2. And again, that C wave is also an ending diagonal. So don't pay too much attention to the micro count. It is a mess. It will likely change, but the best Fibonacci support area I can give you on the micro level is between $81 and $82.79. Any break below 81 would likely send us back into the yellow support region, in my opinion. Or maybe wave B is already unfolding, but that, we would then need to look at that. Again, it's a very, very fragile wave count and scenario and structure, so it requires a lot of babysitting. This here is now expected to provide resistance, so ideally, we push above it, okay, above this trend line, and then there's still more space because in my view, that third wave here still needs to continue and complete. Then we should still see another 4-5 pattern. And obviously, next structural resistance after the trend line is around $87.70, $87.50. If this is really here a smaller degree third wave, then it should reach also like the 1.236 extension of the initial 1-2 setup, and it might take us to like 85.50 to 86.30, maybe a little higher, to complete this wave C of 3, just to give you a couple of levels there. And then I'm watching for the 4-5, and maybe this wave 5 will complete around these previous swing highs, maybe a little higher, but for now the trend is up. And a first warning that a larger pullback is unfolding would be a break below $81. I hope that helps. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.